the rates cap beneficial to credit or not? So I think those are the issues that we are still struggling with.
That is the big question after interest rate cap last October, seen as a walk to financial freedom for most Kenyans who could not afford credit then, since banks were charging as high as 27% interest on loans. The preliminary study by the central bank found out that banks were not approving enough credit to sectors of the economy such as manufacturing, real estate, private households, and trade, which account for 60% of total credit to the private sector.
We've seen what the main outlets where most of us shop, the Uchumis, the Nakumats, the Naivas, all those, you've seen their, let's say, developments, what has been happening. They've been struggling. And frankly, what has also happened is most of them have turned away from the regular bank channels and have actually ended up, quote unquote, borrowing from their suppliers. I think you've had that whole dynamics of the suppliers, let's say, complaining about.
Micro, small and medium enterprises lending also shrunk as large and medium-sized banks channeled most of their credit to corporates whose risks are minimal.
But going forward, we certainly we are monitoring closely, and we will take any appropriate action, including not ruling out, reviewing the caps if that requires us to do.
I cannot tell you whether it is in 2 weeks or whether it is in 2 months, whether it's in whatever period. But all I can say is I do believe that in the end, the data will show that it is quite damaging to the economy. It's quite damaging to our own people. The people that we expected to help are the ones that are hurt the most.
Additionally, Dr. Njoroge expects the rate of inflation to remain outside the government's upper target of 7.5% for a couple of months.
As soon as you have products in the market, you could expect the general price level to sort of begin to fall.
Ronald Willie, News Our Business.